All right, all right, all right. Good morning, my free folk. Before we get started, let me just remind you, do me a favor and hit the subscribe. Hit the bell so that you know when I put something out there. And hit the like because it helps my channel. It goes a long way, kind of like tipping your host. If you want to trade with me during the day or see what I'm doing and take some trades with me, make a little money, catch me on Twitter at trading_off. And I'll call out my trades. I usually call out my entries so you know when I'm going to hop into that trade. I'll give you like a dollar amount if it breaks this, if it breaks that. And then I try to call out my targets. I'll let you know how I squeeze my stops so you get an understanding how I trade, how I manage the trade, which is most important, and my risk management, which is the most important, more important than making money is risk management. So you can trade any style. A buddy of mine was asking me to take a look at another guy's style, and what I thought. And I've said it time and time again. There are thousands of ways of trading a market, and every guy who's telling you that one way is the wrong way is just as valueless as the guy who tells you that his way is a guarantee. So, those two cats ignore because you know what? Every way is a valid way to trade money if you're making money. And really, it's about risk management. It doesn't matter what your style is or what your indicators are or anything like that. You find something that works for you and you implement good risk management and you're going to make money. It's that simple. I mean, yeah, there are probably ideas out there that don't work whatsoever, but you're going to know that. I mean, you're going to know that. If the guy has targets and triggers and setups, then it's going to work for you, especially with risk management. And like I said, if you held a 2-to-1 risk reward ratio, you only have to be right 33% of the time. The ways that don't work are the crapshoots, like just people. This stock's going to go through the moon, and nothing to substantiate it. If you're buying a stock based on fundamentals, it's not a trading situation. You don't expect it to go through the moon. You're in it for the long haul, and once in a while, you end up in the ones that go through the moon, and that's how you make money. You start chasing like the short squeezes, the GameStops, the AMCs, and end result is you're going to lose your money. Yeah, you may make some right off, and it's usually a shame when the guy makes money right away because then he has a bad concept of what's going on and ends up getting hurt eventually. So that's the name of the game, man. All the indicators basically work the same way. A little, difference in presentation or some subtleties, but there's no perfect indicator. The indicator, the price action, that all gets you feeling the market. You got to be able to read the charts, read the market. The charts tell you something, you know. And speaking of tell you something, let's look at what this chart tells us. So I use Fibonacci quite often, and the whole world works on basically the Fibonacci principle, the golden ratio. There's symmetry to the whole world, and that's if you go back and check out my trading videos, there are training videos on my site, and it'll teach you about Fibonacci. I go into Fibonacci a little deeper. But there's a reason why everything moves the way it does. There's just symmetry in the universe, and that's why we look at people's faces and we decide that they're pleasing because there's symmetry in their face, and that's what makes a beautiful person, a visually beautiful person. So I put a fib on it, right? So here's a Fibonacci. It goes from the high to the low, and theoretically, Fibonacci's retrace, right? So I have a 50% in there. That's really not a Fibonacci number, but that's a market psychology number. When this market comes down and retraces 50%, you got 50% of the shorts who might have hit this and come back here, and they're giving back their profit, and they're saying, yo, I've had enough. I'm not giving back all of my profit. I'm at 50%. I've given back 50% of my profit. I'm going to close my position, right? And you have the bulls who are in this stock, and this market tanked and came back, and they're saying, yo, I recouped 50% of my loss. That's it. I'm out. And then you have the bulls down here who said, yo, this is a good price, boom, you know, they're up, right? They're like, yo, this thing retraced 50%, I'm up, maybe I'll start taking some money off the table. So this is where the fight begins, man. This is where the fight between the bears and the bulls begin. Because if these bears are stronger and these bears who got hurt are brave, they're going to push this thing up. But if these shorts are stronger, right, and the shorts who got in down here low are brave, they're going to push this thing down. So that's where you start watching it. And historically, this battle starts at around the 50% mark, right? But theoretically, a 61.8 or statistically a 61.8% retrace is a good retrace, a common retrace, and it's a natural fib number. Very rarely does it tag straight up to the 76. It happens. That's a runner, but very rarely. So this is where you start looking at this. So I put my fib on this, and I knew that when we tagged around here, I was getting somewhat bearish, and I've been trading with a bearish bias. So now we've come back down. And what I'm expecting is a retrace of the retrace. And the momentum has fallen out of it. Yet, you know, normally it comes down, it bounces, it tags out, it comes back down, slams, takes off. But these are trying times, so people are being patient. So what we have here is this consolidation around the old 50% mark. So what I do is I say, okay, I'm looking for a retrace of the retrace, right? Because the same set of circumstances exist in this run-up right here. You got bears and bulls fighting it out. So now I'm expecting this retrace to about 50%. That's a congestion area, which kind of works on the principle of what my buddy was working at talking about upon information and belief of supply and demand area. Congestion, or I use the Ichimoto cloud to give me that sort of perspective. All the indicators, I'm not going to say they're all the same. They all work relatively the same. Get comfortable with your indicators. There's no golden bullet. There's nothing that's going to get you into the stock at the right time, get you out at the right time. They're all aids in helping you read the market. The first thing you got to know is price action, and then boom, 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 boom. So right now, I'm looking for a retrace. I'm figuring it's going to come down to the 4408. And this is if there's no problems. I mean, we got Putin out there. We got a bozo in the office. We have an administration that sucks. We have a Treasury Secretary that I couldn't stand when she was the head of the Fed. So I'm not feeling good, man. I mean, if we had the dirty loudmouth in office right now, then you know, we know that he'd be behind the economy. He'd do something, and it would be encouraging. But yet, you know, we have an empty suit in there. So yet, you know, American people got to make a decision. Do they want empty suits or dirty loudmouths? Because these are our political options. Because nobody's brave enough to vote independent. So anyway, this is it. So today we're probably going to open flat. It's kind of early. I got up early, and I hopped right on this video because some of my free folk were bitching and moaning that I don't go in depth anymore. But you know, I go in depth when I stream or when I train. But it's hard to go in depth in the morning market meeting or an EOM. So up yours, free folk who bitch. No, I mean that with all the love in my heart. You have to have thick skin on this channel. All right. So anyway, we're looking for the 50% retrace. Right now, we're going to kind of open flat. This, let's make that a little bigger. This is an inside bar right here. See, here's the high of this bar, the high of this bar. This is Friday. What is today? Today is Tuesday. Okay. So this is Friday's bar. Monday's bar traded inside. We're going to open up flat. We're going to open up right about here. It's still an inside bar. I'm neutral. I won't even give a bias because if we break this high, then we're going to push up this high and we're going to have to fight this. But we got this gap right here and it may just drag us up. I don't want to see that happen because if we close that gap, yo, that's a setup for a drop. I would rather see us break the low, push down, tag out on the 50%, and then you got to figure your target is this gap right here. So that's it. That's how we play this inside bar. We're going to wait for the break one way or the other. So for everybody who's going to text me and be like, Dave, do you think it's going to break up or down? I have no idea, man. The crystal ball hasn't worked in quite some time. Pretty much when I put down all the hallucinogenics. So we're going to have to wait and see what the market does. But when the market does do what it does, we're going to take advantage of that. We're either going to put on some puts, or we're going to put on some calls, and we're going to take that trade. And these are, this is day trading. All right. This is not investing. This is not long-term stuff. This is day trading. It's speculative. If you're not good, you're going to lose your money. If you just got started, you should be paper trading. Paper trade until you are an A1 athlete at it. Because once you throw some money in the mix, the psychology will throw your game off. So if you're kind of methodical and it's systematic and you have good risk management, you're going to get through some of that psychological problems you have. Because basically you need the money rolling in to be comfortable trading. And I don't mean rolling in from trading. Like, you need to have a steady stream of income, whether it's from long-term investments or something like that, that you're not worried about that risk capital that you're trading with. All right. So all the big traders, man, they get their bonuses at the end of the year, but they have a salary. Yeah, they get management fees and shit like that, and they have a clear head. They're not gambling or banking on the money that's going that they're playing. The retail trader is trying to make a living off of their capital, and that's a difficult thing to do as a trader. I mean, it's not impossible. People do it, but you got to be a superstar, and you got a better shot at being smart than being a superstar. So, I mean, everybody comes into it and thinks they're a superstar and a hot shot and a big swinging dick, and they all have their moments. But, reality sets in, market smacks you on the nose, and that's it. You're like a dog who just got beat with a newspaper. So, anyway, enough of my pep talk. So that's what we're looking for today. We got to watch Putin. Putin's a pain in the ass, but he usually picks on the Democrats anyway when they're in office, is what you get to expect. So we got to keep our eyes open on that. Figure he's going to lay low until after the Olympics. So just trade accordingly. Like I say, everybody should be calm and cool. I got my meditation in, so I am feeling at peace. And you should be at peace too when you're trading. And good luck trading today. Oh yeah, join me on Twitter. Off underscore. Nope, that's not right. At trading underscore off. Catch you later.